Hello guys, glad to have you on board again. Today we'll do a usual review of the major assets, at least the one that I care about for the short-term trades, or at least intraday things I'll be having a look at today. So we're now mixing intradays and swing depending on what areas we're actually trading on those assets. So anyway, let's start with the cryptocurrencies. So the cryptos can actually move out if they don't care about the rest. So what we have currently is breaking the previous day highs after 3 days of pretty much standing still into the same price area. So is this actually an area of interest? My answer will be no. So let's step down to shorter time frame, trying to find one that is surrounding the current market moves. So as you can see in here, we've got absolutely nothing suggesting interesting prices, as we do have both bullish and bearish signals. So trending signals in a market that doesn't trend, so pretty much trending signals in a range, signals that there's nothing we can do in here, at least nothing we can exploit. All we can say is that we had a squeezing structure in here, and so far we might be trying a bullish extraction. I insist on the fact that I said trying, because in here obviously for now we have early trending activity. As you can see, the bearish resistant context in here, the trend channel, sorry, the resistant trend channel is accelerating. So this is normally an early signal of trending setting itself, which means the bears are not being tested anymore, at least not right now. We're just dying in between. Yes, we do. So this is not a strong bearish trend neither, because if it was a trend, we would actually be trading close to the support context instead of trading sideways in between. So we're still hesitating, but that's the bias I think is dominating at the moment. We don't have strong bearish movement because we need to save some time. We need to go sideways, but still the bears are highly dominating in this current market state. So 4 hour, I would say, not necessarily readable. All we can say out of this time frame is that we're still trying to figure out if the next technical area that we're going to target is either going to be, sorry, let me just, either going to be this one, right, filling the gap, so at least getting into average prices, or filling this gap. And what we do is exactly sitting in between. So there is going to be a decision out of this. As we can figure out that we're squeezing, you may expect some jitters surrounding the prices. Like we could do this and then do this and do this. All right, so expect some unexpected sting, because we're definitely into a dying area in which, yes, I'm much more comfortable being a bear, simply because my trades are safe into areas that normally the price shouldn't be reaching out to. So I have a lot of room to work with, and I'm fine with my current risk management. So I just do nothing. I let the market work out this area. It is hard to figure out what the hell is going to happen, since my early plan for this week has been pretty much changed in terms of timing. I expected the market to be crazy bearish at the open to find some supports and then digest. That's not what we're doing. So we're pretty much digesting to, I think, get there and fuck it up instantly instead of getting here and rebounding. So I don't think the market wants to find a support in here. I most likely think the market wants to break this low volume area to get to trade down the next one. So yes, somehow I think that's not necessarily a good news for the bulls. It's more like you would have liked to test this area, risk manage, and be stopped out if you were wrong. But you would be stopped without losses because you would have been able to risk manage. By doing some sideways action prior to eventually testing this area makes it very, very less likely going to react bullish. They're probably not going to be an early bullish reaction in here, so that you could have eventually bought and secure your trades. So for the bulls, all I can tell is that right now we're just Wednesday, so it's not that big of a deal. There's still a lot to come for the week, but unless we do this today or tomorrow, I would say don't try to catch the dip. Pretty much what I would fear this week is for us to eventually get there, close in here on Friday, all right, or eventually try to fuck up this resistance just to bring some bulls in the game. I'm not necessarily sure that this will happen. The only thing I can measure today is that we broke this trend line, this one only, and it's not necessarily a huge trend line. I would say it's just classic trend line that will break out in ranges. All right? So all it says is that, yes, I think we're just range trading, pure and simply. So just as we had a trend line in here, we fucked it up, all right? We've got this one, we're fucking it up as well. So it just gives us an area somehow that we can work with, and we can just die in here, like I said, contract prices before getting an actual direction. So pretty messy right now, pretty much a market maker activity in here, so it depends on whatever the fuck is gonna come inside the order books. I'm been using this thing that I showed you yesterday, so I think I got it in here. Yes, this one I don't need it anymore. All right, so this one is a tool I built. So still clearly a lot more buyers than sellers in the actual trading exposition to this market. So a lot of people exposed to the upside when technicals are seriously bearish. Normally it should be a concern of a potential speculative collapse going down the road, purely and simply because people are buying, hoping that will reactivate the trend, but the trend wasn't a trend, it was a bubble. So generally, this is how ugly stuff starts to trigger. So I stand for what I said. I think still pretty much significant odds to the downside in my personal way of reading the market. But in the short term, I've got nothing to exploit. Let's have a look at Bookmap right now so we can study the order book's behaviors throughout the latest 24 hours. And let me just zoom out. Alright, so this is what we have in the order book for the latest 24 hours. I'm still discussing with Bookmap, obviously trying to get you rebate prices of out of public pricings, simple as always do for you, right? When I get to reach out to some services, they always offer me to get like 20 or 30% of your of the money you spend out there to just send them back to me, all right? The usual stuff that we get when we have big communities. So once again, I could be just making money out of your asses by selling you some products, and anything you spend will be 20 to 30% back on my pockets. But instead of doing this, like I always do, I just try to make you pay cheaper prices. So instead of making 30% on your asses, I rather like you to pay 30% less. So that's what I'm negotiating with them right now, to put some kind of a promotion code for you to get some rebates out of what you could spend out there. This is definitely a great tool. We'll make a few podcasts about this one, obviously. I'm not trying to sell the shit. Once again, I don't get anything out of you using Bookmap or not, so you'll do as you please. I think that's the only way I can actually talk to you about this thing. If I were talking to you about this and making money in the background, that would definitely change the bias. All right, so I don't do this to sell you some stuff. It's just that whether you like it or not, I'll give you the pros, I'll give you the cons, I'll give you the price, and you'll make your own decisions. It's simple as that. So anyway, that's how how I can read this market, right? Figuring out how the market makers are working out the price areas, and I can definitely tell you that what we have in here is a market making. So for now, I can tell for sure what we have, but as you can see, all right, these are not short-term traders that are taking action, more likely big market movers who are orientating prices and creating demands. You can see the guy in here has been orientating to buy, and then suddenly it gets to orientating to sell, and as he stops selling, is asking to buy. So it's definitely market making activity in here rather than actually the market getting to demand areas. So we can figure out this one, who is actually some demand that has been lasting over the 10K, but as you can see, we're losing some steam in here. So some people that were asking this price are now getting out. So what we can see is that I would say 10K, yes, that's definitely an area, but it's somehow losing steam. Just like this one was losing steam out of 10.200. But the thing is that there are some areas that are clearly not losing any bit of steam. This is still the same area. I'm sorry to say that, but this is still where we've got a freakingly huge demand in here. Yes, part of this demand has been going out, as you can see. All right, we've been rising demand, and recently some people got out in here or got out in here, but still, look how many. Those orders never change. The guys who are in here at 8.5K, they always been there, right? I've seen those orders for quite a long time. What I care about is how the demand swing, it changes in this area. If the guys who got out in here, I've seen them going in here and asking prices on resistance, I would have said yes, we can probably forecast some deeper retracement. But in the current stage, all I can tell is that, do you really think we're not going to bet to get into those orders when probably most of the traders are bullish right now, which means we just have to trigger the stop losses to get to those areas. So I think yes, that's what we'll do. I think that's the next swing move. But so far, I can hardly tell what decent price can we either buy or sell with a low risk taking. So for now, as I said, all right, like if you zoom out, you get to see what actual big guys are doing. They're just attracting prices, both bullish and bearish, so they don't know what the fuck they do. They just process information as they come. As people asking for bullish prices, they're putting it up. People are asking for bearish prices, they're putting it down. So it's more likely something that you can actually not profit from, simply because you have no hedge on this thing. Even using Bookmap doesn't necessarily provide you reliable tradable information, as for now all we can have in the short term, as you can see, is that we've been executing those orders, right? So this one has been executed, right? We fill those orders. So the last thing we've done is filling some bearish demand, all right? So at some point, if the market is hesitating, I think we're very likely going to reverse. So where is the next bullish demand? For example, if we were to exploit this information, saying, all right, we sell in here, you put the stop loss slightly above and you expect the prices to go down, I would say 9.4K is the next demand area. We've got a tiny one in here, but still 9.4K is the previous day's lows. So I don't think that this is somehow worth it. So I would say today it's just a market making purpose, and whatever you do, there are higher chances that the market maker will be more profitable than you will. So just don't trade. Today is definitely not a kind of day where I can tell you I would do this or this. All I can tell is that I have no hedge, so I'll just get to do something else. It's really as simple as that. So today cryptocurrency is just stay the fuck out and let it go, all right? You cannot trade every day. Just wait to have decent odds and chances to actually profit from this. So that's it. Sorry, it was a long intro, obviously, but I wanted you guys to understand how processing just led me to that simple conclusion. There's nothing to do. Regarding actual stock markets, hard to figure out what the hell this is. So let's talk just about Apple. What am I going to be doing with Apple? Am I going to be invalidating the scenario? No, I don't think I will. So let's talk about the results all by themselves. So people are saying, great, great, great. We managed to beat the consensus. I would say yes, still, but what actually is bringing prices to the upside is the fact that they said they will spread 75 cents per share of dividend. They also said that they spent $17 billion of share repurchase over the last quarter. So yes, if you just put it out, the numbers, that actually means that without those $17 billion, we would have been an EPS of 2.04, which means below the consensus. So revenues are going down, EPS are pulling down, but as we artificially pull them up, then people are happy. So still the same problem to me. We don't actually value the company as it should be. We value the company out of the enormous amount of cash they have, but cash is not unlimited, and they rather like to keep these cash for investment if we head toward a possible recession, because that's what makes the difference out of a company that will grow even bigger after the recession, because they will be able to buy some competitors when they'll be cheap and on jitters. All right, the problem is when you have a strong company that has a lot of cash, and if a recession shows up and you are not in debt, then that's great. Then you can buy all your in-debt conquerors and competitors and be even stronger. So that's the deal. I think Apple should just stick to their plan, which is waiting for opportunities to buy some competitors instead of spending some crazy fucking shitty amounts of share buybacks to avoid people getting out of the share pricings. They must be aware of the fact that share pricing is not what you care about. What you should care about is where your fucking company will be 5 to 10 years from now, and I sincerely think that Apple has been changing their minds regarding this. They want short-term profits, and that's not a good sign. Not at all. That doesn't seem to be a reliable thing to do to me, just like Amazon is doing a pretty fucking more reliable thing to do. They accept pricings to go down. They don't try to manipulate asset prices. They do it just by communication. It's simple as that. They won't say the share is not good or whatever. But as you can see, Apple, to me, when I just read the report out of what Tim Cook's been saying to the press and analysts, I would say, oh my goodness, the guy just says, all right, we've got a strong company, all that was not good is just still not good, but it's better than expected, and we have a positive vision for the next quarter. Do you? Because if actually a recession is looming down the corner before the end of the year, then you will probably have to trigger another profit warning. And just to ring a bell, all right, the highest, the first company reaching $1,000 billion should never ever have to issue a profit warning. But you did on the last quarters of 2018. So really huge concerns out there, all right? Professionals should never have to reach profit warnings. So what you just said in here is selling some dreams, and you better hope that they will come true, because if they don't, that's another profit warning. And if you do them twice, normally that means you're not really trustworthy in terms of future investments. So rather than fucking up with your investors, you would rather like to be honest with them and saying that you actually don't know, it's not that bad, but it's not that good, instead of saying bright future, we're going to make $60 billion profits for the next quarters. Are you really going to be doing this? I doubt that. All right, so still a huge problem and a huge concern, I think, regarding Apple. What saved them right now is just their 60% margin profit out of services. So that's probably the most profitable company. But let's be honest, all right? That means they're selling you something 60 fucking % more expensive than it actually cost them. So yes, that's great. But what it actually tells us is that they're really great at selling stuff, but to less customers, so that's not good neither. They can make shit tons of profits out of really rich users, but as those users tends to be less in actual number, all right? Less people using iPhones, less people using MacBooks. So the problem is this: you can cheat on the numbers, you can hide the actual numbers from us of how many iPhones you sell or whatever. Yes, you can hide stuff, but the reality is that your user base is shrinking, and as it is, how the hell can you expect sending and selling more products in the future? There is something that goes wrong in here. They start to diversify. They just bought a chip maker. No, it's not a chip maker. I don't know. I'm not going to say something. They just bought a company recently for $1 billion. I just don't remind what it is. But yes, so Apple is doing quite some good things as well. I'm not saying it's all black or white. All I can tell is that people take it as a good thing. I don't think it is. It's actually the second quarters in a row that we have with contraction in benefits. So it really raised the concern about building the profitability top on shares. So if we build a market top in here, why the hell will we get down those prices again? So all I can see is that we had an open gap in here, all right? We somehow closed the open part of this gap in here, right? So it wasn't entirely closed, but yeah, I mean, it was just a couple dollars away from the price, so I could consider this filled. So we could try to fill the gap, all right? I wouldn't necessarily be concerned with it. So that's what we're doing right here, right now. We closed this gap. But still, do we actually have a buying signal? I don't nearly think we have, all right? The volumes are really, really not significant. So we'll see what it is today, at the end of the day, how significant the volume could be. But so far, all we had on the overnight session wasn't really, on the extended trading hours, not really that big of a deal. So we'll see how it is on the next few days. But to be honest, all right, just remember what we had in here. All right, look at the earnings we had, all right? So in here, and we gapped the prices down because the market expected to go down. So what we have today can be significantly different by the candle close. So today is an important session, moreover the Fed, so you figured it out. every day, today I'm not triggering stop losses on Apple because there's the Fed, and if the Fed actually reverses, then the worst case scenario would be down the corner, which means Apple early buying to be in here related today, kind of a Facebook stuff, all right? Like Facebook, good, and oh man, not good. All right, so that's exactly what I think is the worst possible scenario. People not buying Apple, or robots buying Apple on tiny volumes, breaking a resistance to actually reverse out of the next 24 hours, or let's say the next 48 hours. I would actually wait for this because we're going to have the Central Bank of England obviously tomorrow as well, the NFP on Friday. So I would say if you're patient and if you have some room to work with, which is exactly the case for me, I remind you that Apple, I'm reinvesting my previous gains, so I'm fully comfortable, even if that means that right now, at the current time, my entry prices are pricing negative, right? So yes, for now, it's a pending loss, but I don't really give a shit. To me, a loss is just a pending gain until it actually gets to reach my stop loss. So I have no stop loss on Apple because I'm not stupid. I'm not putting a stop loss right before earnings release. It's just I'm going to watch out for the current market pricings and the short-term actual price movement to figure out what to do with it. So I'll see by the end of today what I'm going to be doing. I'll see by the end of tomorrow as well, and then the weekly candle close will be my final decision-making process. So by Friday, I'll be able to give you a full information about whether I'm getting in, out, or whatever. I just took a short entry on Microsoft. That's the trade I gave you not to follow. That's absolutely not possible. Just giving you the process that led me to this decision-making process in here. First of all, we're trading a squeeze, so remember that the beginners should nearly get their hands down these problems. We're trading a crazy fucking weekly bubble as well, so let me just zoom out so you can figure this out, all right? So we had the volatility area in here, sideways jitters, so we're now back into the final excess of this bubble, but this is the most dangerous way to trade it. What I exploited is just a tiny mistake that the indicators have done. In here, it just has been a tiny little glitch, all right? Which means in here we should have triggered a bullish breakout, which means normally we should have had a breakout target in here instead of, it's been detected a few days later, but this is where the actual breakout occurred, right? You can see the trend line's been broken up. This is clearly where the breakout occurred, and the indicator just failed detecting it. It actually detected it a few days later, so too late. And the actual target shouldn't be there, but should have been there, all right? So normally we should have had a target in here. Remember that targets are valid for 40 bars, so we would still be at the end of the viability for this target, but still in a valid target area with the squeeze, and we had a hammer, which I like, all right? This is exactly the kind of structure that I like on Bubbles asset to reverse. So what I like is either that kind of thing, strong bearish engulfing with increase in volatility and volume. This is the kind of things I like, but in here, as you can see, we were seriously lacking volume when we try this breakdown. What I saw in here instead is way more interesting. Earnings release being sold, the market trying to overcome this, building instantly a hammer pattern, and confirmed it by yesterday closing lower. So we might build a range in here for the next few days, and normally I expect this range to go bearish. I still have a few days to work out this potential target that was misplaced, but if it works out, normally that would just be all right, selling a target. Squeeze isn't a signal. Normally you should be waiting for a bearish breakout in here. So that's the reason why I put it a large stop loss. I'm stopping at 146. I took a very tiny risk, like half a percent. So it's not a big trade. It's just I'm trying things out just in case Apple would have been disappointing. But Apple could be bullish today and crazy fucking bearish tomorrow because of the Fed. So hard to say whatever the fuck is going to happen. That's pretty much it for today. I'm looking at GE, who's going to publish later today. It's going to be interesting whether we break up the resistance or not. We'll see about that. That's all I'm pretty much having a look at today. AUDNZD has been breaking up finally, so as I said, all right, double the previous candle, breaking the market top. So if we can handle that kind of candle close today, the best case scenario would be closing at the high, and instead of reversing like we did the last time, keep on going toward confirmation would actually be a good sign. So in an intraday basis, this is what it looks like. So I would like the market to build somehow a support in this area instead of so building the trend, all right, instead of fucking up the trend channel in here, buying it and get to make higher highs or closing in here later today. I don't mind if what we're about to do is like this and this and this. All I care is for us not to catch up on the support context. I want us to build a trending context, so buying the trend channels instead of context. That's what I'm watching for. Just overwatching. I already had some reinforcements on AUDNZD. I'm fine with my current exposition. I just need to make sure that we actually validate this today's reversal. I think we've got early positive reactions, but these still require candle closes and mostly daily closes before actually reinforcing on my end. Tesla, I'll probably having a look at some reinforcement rather sooner than later. I think this area with a 20 moving average on the intraday would be seems pretty interesting to me. We're working the 1 hour averages as well. So yeah, as you can see, lack of volume in this area. Let's just zoom out and you'll figure this out. Let's just use the daily chart. All right, so we've got the low volume area in here, right? So consider this as a big range, right? This is the selling activity in the range, this is the medium activity, this is the support activity. So for now we're trying to save the dip, but the problem is we already broke this range. So to me it's just we're pullbacking. We failed in here to reintegrate the volume. So I think yes, what we're doing here is just a tight pullback before probably selling again. I think selling in here is fine. I'm not yet reinforcing my previous entry in here is a perfect price, so I'm at break even right now. I'm just waiting for decent price action to actually reinforce. I think 1 hour will be my actual signal, but for now I've got nothing to actually exploit. So I'll just let go. Like what I would like to get is something like we drop again, try to rise higher and selling the 61%, or we just drop and drop. All right, so that necessarily not a big of a deal. So as long as we don't get to previous lows or we don't get to this area like 248, I'll just do nothing. All right, so it's just patience right now. I'll wait to see. I'm curious to see how it will react today with the Fed. Obviously everything surrounding the dollar, so gold, silver, WTI, or Eurodollar, GBP, USD, these are all stuff that are unable to read. No one knows where the fuck this market will be by the end of the day. I think the 10-year bonds is going to be the major game changer instead. All right, so I think this is where the actual game will play today. We're into resistant weekly context, so I still tend to believe that what the Fed has been doing is going to reverse this trend. And if they do, all right, which means that's what the market is anticipating. All right, so normally we should have no reverse. Normally we should be breaking up. We've got a mature range, it's a bit bullish orientated. So normally if the Fed delivers, all right, we should have bullish bonds breaking through resistances. And the question is, who is going to go down? We've got multiple options. Remember that this is a triad: the dollar, the bonds, and the stock market. One of those three has to go down so the others can rise. It's simple as that. You cannot have bullish dollar, bullish stock market, and bullish bonds. That doesn't even is possible. That is not possible. So turn it however you want. You can do whatever you think, but let's be honest, all right? You cannot have all of them being bullish. So I'm selling everything. So I'm sure I'm going to get the right one. I'm selling the stock markets, I'm selling the bonds, and I'm selling the dollar. So it's how it is. I'm going to be right on I'm going to be right somewhere. I just don't know where and when. So for now, I just wait for the Fed to change the Fed's policy, to reverse, to give the red cut, and we'll see how the market reacts. Other bond traders going higher, all right, or other bond traders leaving the market. So instead of buying, they're selling the bonds, saying, oh my God, we're not going well. What we do is we're heading toward recession with a shit crazy ton of debt. I don't want to have debt in my portfolio. Another thing I will be having a look at is how we behave with both junk bonds versus 10-year bonds. If the junks are collapsing today and the 10 years are bought, then this is what should cause the stock market to actually reverse and build a top. So have a look at all those things. Remember that the junk bonds and 10-year bonds can be interesting to read some way. Obviously these ones are crazy underperforming, but that's normal. But if those ones were about to go down, with those ones going up, means people want safe havens, and even with share buybacks, I think we might have a bearish stock market. How the dollar will react to this is a good question. If we're heading toward this, all right, bullish bonds, but government bonds going up, but corporate bonds going down, and stock market building a short-term market top that will sooner or later be validated as a long-term market top. But if that's what's coming, obviously gold will go up. That's surely what's the most probable. And the question is how the dollar will react to this. Are we expecting dollar go down? Normally, cutting rates should put the dollar down. And in that perspective, we'll have government bonds surging, junk bonds falling, stock market falling, and dollars starting to retrace and starting to build a market top as well. So it is hard to say. Definitely a lot of scenarios, of possible scenarios today. Normally, the Fed is changing the path it had over the course of the latest years. So normally something should be changing. We should have a swing trade today. The question is, are we going to end the previous paradigm in which everything's fine, the central banks will save us all and stuff like that, or are we just making it even further, one step ahead into more stupid trades? So I don't know yet. Like I said, the Fed might be creating the biggest ever market bubble in the history. We don't yet have asset bubbles, all right, let's be honest. The stock market is expensive, but we're not yet into a crazy bubble. We just have some assets bubble. But those assets have been creating some strong growth as well, all right? Let's be honest. The Googles, the Apples and stuff like that, they've been creating quite some growth. But still, we're paying them pretty fucking expensively. They've been building parabolic scheme structures. So yes, it's dangerous. Definitely it is. But don't even try to say things have gone too stupid, so I need to sell and hold. Never ever do this, all right? So I'm totally aware I could be wrong. It's just I'm playing this timing, and if it ends up being wrong, if I'm wrong with the Fed changing its course and reversing and building the market top, then I'm probably going to have to let it go for at least 2 to 3 quarters before having an actual next timing of weaknesses. All right, if the current paradigm still plays along, then just let it go. All right, let it go. Accept that we were wrong in timing and just save your money for further trades. That's how we need to be in your current mindset. I'm gonna have to leave you guys as I have my meeting in quite a few minutes. So I hope you enjoyed this thing. Be safe with the Fed. Don't try to play God. And if you end up being proven wrong, then just accept it.